The Allen Line Company thanks all the hard-working drivers who are moving goods across the country. We can't do it without you.
OOIDA, representing America's truckers since 1973, presents Landline Now with your host, Mark Redding.
The Treasury Department recently changed some reporting requirements for small businesses, including smaller trucking companies and owner-operators. Barry Fowler of Taxation Solutions joins the program to help us understand what's required. A long-running court case linked to the trucking industry about who's an employee and who is an independent contractor has finally been settled. I'll get a rundown from Tyson Fisher of Landline Magazine. And finally, it's been a rough start to the year for the spot market. Landline Now's Ashley Blackford speaks with Robert Rouse of DAT about how this past week went and to find out what demand will look like as we move into the spring. But first, the news with Scott Thompson.
Thanks, Mark. As the Federal Motor Carrier Safety Administration considers changing how a motor carrier safety fitness is determined, OOIDA has some recommendations. They came in formal comments filed in response to an advance notice of proposed rulemaking. FMCSA issued that last year, floating possible revisions to the safety fitness determination process. And then last month, the agency issued an additional notice that gave the public an opportunity to comment on several reports that could inform a potential rulemaking. Those included reports on in-vehicle monitoring systems, the association between crashes and safety-critical events, the impact of federal compliance reviews, the effectiveness of safety technology, and recent fatality crash data. As it stands right now, a safety fitness determination is based on analysis of existing motor carrier data and data collected during a compliance review. Carriers then get an overall safety rating of either satisfactory, conditional, or unsatisfactory. OOIDA, in comments signed by Association President Todd Spencer, urged FMCSA to avoid relying on the Compliance Safety Accountability and Safety Measurement System programs, which went into effect in 2010. OOIDA wrote that the programs have completely failed in their objective to reduce injuries, fatalities, and crashes, something the association said will not change until the process incentivizes actual safety performance instead of regulatory compliance. OOIDA also encouraged the agency to avoid any sort of beyond compliance methodology that would reward carriers who install the latest safety gadgets on their trucks. FMCSA received 176 comments from the advance notice. Support is building for a bill in the U.S. House that seeks to stop FMCSA from imposing a speed limiter mandate. Representative Jeff Van Drew of New Jersey is the 34th co-sponsor of the DRIVE Act. The bill was introduced last year by Representative Josh Burkeen of Oklahoma as FMCSA's speed limiter ambitions were taking shape. Those plans have come into focus even more since. The agency plans to publish a supplemental notice of proposed rulemaking this coming May. If that holds true, the agency is likely to reveal a proposed top speed at that time. During a House hearing in December, which included then Administrator of FMCSA, Robin Hutchison, Representative Van Drew made his concerns about a speed limiter mandate known.
These drivers give many examples of situations in which they need to accelerate for safety, whether it's merging into highway speed traffic, building momentum to go up a hill, or simply keeping up with the flow of traffic. It is a hard and difficult job, and they do it well. Your policy would take those options away from them. We're tired of this. We're tired of big government. You know, one gentleman, his comment was, not mine, his, quote, "This is a stupid idea," end quote. The policy is overreach. We're tired of overreach. It's a classic example of government coming to save us, against for ourselves. There's lots of independent truckers, and they would be harmed by this policy.
Pushback to the idea of a speed limiter mandate has been consistent from a variety of angles. Legislatively, the House bill is joined by a companion bill in the Senate, where 9 co-sponsors have so far signed on. In the public arena, an advance notice of supplemental proposed rulemaking last year yielded more than 15,000 comments, with the majority coming from truck drivers who are opposed to a mandate. And groups like the Owner-Operator Independent Drivers Association have been vocal in their opposition as well, encouraging members to speak up and push back. To join that fight, check out fightingfortruckers.com. Meanwhile, Representative Van Drew is also lending his support to a separate trucking-related bill, H.R. 3869, otherwise known as the Trucker Bathroom Access Act. He signed on as a co-sponsor to the bill this week, along with Representative Brian Babin of Texas. H.R. 3869 is beautiful in its simplicity. It wouldn't require any funding or new facilities. It would simply require shippers and receivers to grant bathroom access to truckers who are dropping off or loading up at their facilities. Here's what the bill's sponsor, Representative Troy Nehls of Texas, told us about why he introduced this bill in the first place.
The idea, and I think, you know what, I think it's almost embarrassing. It is, as a member of Congress. I have to get in front of a committee and talk about, hey, we need to create a law to provide bathroom access to our truckers, with many of them women. Well, what the hell are you talking about? We got to get a bill to let somebody use a bathroom when they're delivering their goods and services? It makes no sense to me. It was actually embarrassing, quite honestly, to think that these truckers are going to have to go out there and find that fire hydrant or go out in somebody's yard or find a big tree. Hell, I don't know. But it's absolutely silly, and it's shameful that Congress has to intervene here and provide bathroom access for our truckers. What do you expect a woman to do? Now, come on, us boys, we can just go find that tree by the golf course, right? What does a woman do? You know, what are you doing? What are we doing? So we got to be better about this. So we filed that legislation. I think we're going to get that passed. I want to see somebody argue the point. I want to see a member of Congress say, I can't support that. Oh, that would be fun. I want 5 minutes with them.
The bill came out of the gates as a bipartisan piece of legislation. Representative Chrissy Houlihan of Pennsylvania, a Democrat, is an original co-sponsor, joining her Republican colleague, Representative Nehls. FMCSA has officially granted an exemption extension request from the Motion Picture Association. It applies to more than 8,000 commercial motor vehicle drivers who provide transportation to or from a theatrical or television motion picture production site, giving them the freedom to forego electronic logging devices in lieu of paper records of duty status. The agency granted the request back in November, but opened things up to public comment before making a final decision. After reviewing the 4 comments that came in, FMCSA concluded that drivers who qualify for the exemption will likely maintain a level of safety that is equivalent to or greater than the level of safety that would be achieved by complying with the ELD requirements. That extension runs until January of 2028. Iowa has issued yet another extension of a harvest proclamation that was first enacted last September. It's the 5th extension if you're keeping count. The proclamation, which runs through February 23rd, gives vehicles transporting ag products like corn, soybeans, hay, fertilizer, and manure the freedom to be overweight without a permit. This relief applies to loads transported on all highways in Iowa, excluding the interstate system. Loads cannot exceed 90,000 pounds gross weight or the maximum axle weight and must comply with posted limits on roads and bridges. And finally, a company that specializes in providing paid truck parking spaces has opened up a new facility in Arizona. The site at 43rd Avenue and Lower Buckeye Road in Phoenix, about 10 minutes from Interstate 10, used to belong to Yellow. Semi-Stow bought it up as part of Yellow's bankruptcy sale. This is Semi-Stow's 3rd location in Phoenix. It offers up 300 truck parking spaces that can be rented for parking, storing, or staging trucks and trailers at a daily or monthly rate. And that's Landline Now News for today. I'm Scott Thompson.
Thanks, Scott. Next, we'll hear about some new reporting requirements for small businesses from Barry Fowler of Taxation Solutions. I'll cover a court settlement in a New Jersey case involving truckers with Tyson Fisher of Landline Magazine, and Ashley Blackford talks about a rough start to the year for the spot market with Robert Rouse of DAT. We'll be right back with more. I'm Mark Reddick, and this is Landline Now.
Thanks for listening. Be sure to like and subscribe. If you want more content, go to landline.media to get updated news, information, and archived editions of our show. Once again, that's landline.media.
Capital Reman, your leader in remanufactured diesel engines and components, is celebrating its 10th anniversary. Let us help you avoid costly downtime and repairs by visiting capitalreman.com today. Use code OOIDA10 to receive your member benefits.
Stock up on Howe's Diesel Treat, the nation's most trusted anti-gel. And to be safe from the harshest winter conditions, make sure you have Howe's Diesel Lifeline on hand, the fastest-acting gelling rescue product. Available nationwide, Howe's products are designed to keep you rolling through the toughest conditions. Visit howesproducts.com.
Attention professional drivers, are you behind on your tax filings? You owe money? Integrity Tax Relief Group frees drivers from IRS trouble. You watch the road, we'll keep an eye on the IRS. Call now, 855-976-4291.
Buckling up keeps everyone safe on the roads. Learn more at www.sharetheroadsafely.gov. Paid for by FMCSA.
Landline Now, welcome back. The Treasury Department recently changed some reporting requirements for small businesses, and trucking companies are included. Joining us to make sense of what has changed and what it means for you is Barry Fowler. Barry is the president of Taxation Solutions, and he's been providing IRS tax debt resolution and bookkeeping services to the trucking industry for more than 21 years. So first of all, Barry, thanks for doing this. We appreciate it.
No problem.
So something changed recently within the U.S. Treasury Department, and owner-operators might, I think, need to make adjustments. Let's just start with the basics here on what's different. What exactly changed here?
Well, in 2021, Congress actually passed a Corporate Transparency Act on a bipartisan basis. And it actually created a new filing for beneficial ownership information reporting. And it's the U.S. government's effort to make it harder for bad people, bad actors to hide or benefit from ill-gotten gains and shell companies and other things they do using business structures.
Okay. So, I mean, ultimately, this is a situation where we're trying to stop the bad guys. And like with most things in life, when we try to do that and put protections in place, it does affect law-abiding and, you know, the people who are playing by the rules out there. In this case, what exactly has changed for owner-operators? How are they affected? And is anybody else, I guess, affected by this as well in terms of trucking?
So an owner-operator, depending on how they're set up, will depend on whether they're affected by this. If they are a sole proprietorship, just running it under a doing business as or underneath their own name, it will have no effect on them. They will not have to do a beneficial ownership information filing. They can keep going on the same way that they've been. But if you've established a corporation or a limited liability company or a limited partnership or any other entity that you actually have to create by going to your Secretary of State's office or similar office in the U.S., then you've got to do this beneficial ownership filing via fincin.gov. So they have places to set it up. They can actually do it themselves, but it does impact you if you are a corporation or a limited liability, you know, one of those entities that are set up at the Secretary of State's office.
And I mean, what does that process look like? You mentioned the website. Is it just as simple as that? Is it going to the website and filling out information and kind of moving on from there? How, I guess, intensive is the whole thing?
It doesn't appear to be that intensive. We have not filed any of those yet. On that website there, they've got some pretty good filing instructions and everything. On their first page at fincin.gov, it'll have a link to that beneficial ownership filing report. You would click on that and then move on and answer their questions. For most owner-operators that are corporation, S-corp, you know, LLC, it should be fairly simple to where they can do it themselves. And they're the owner. They're going to be the one that's really the beneficial ownership out there, and they don't have to report, you know, some of the other things that some of the larger companies would do in filing this.
Gotcha. Well, I mean, we're talking timelines, deadlines. What does the timeline look like for this? Is this something that people need to do sooner rather than later? Do they have a little bit of lead time, or what does the timeline look like?
So they've made this kind of confusing, and part of the reason here at Taxation Solutions we get this question is that they've put in different timelines for different types of entities. So if you created your company or register to do business before January 1, 2024, then you have until January 1, 2025 to file your initial, what they call the BOI, Beneficial Ownership Information Report. Now, if you create or register your company in 2024, then you only have 90 days after you actually set up the company to file this BOI report with FinCEN. So they kind of gave you a couple different reporting deadlines. And then starting in 2025, you get 30 days to file this BOI report for any new registered companies out there. So it's gotten a little confusing, and we get the question, do I have to do this right now? If you were in existence before this year, then you have till the end of the year to actually do this filing, and you can actually take your time. But don't forget, you still got to do it.
And I think it's important to mention that you do need to do this, right? I don't think there's a fee associated with all of this for now, at least, right? But I would assume there are penalties for not doing what you're supposed to do?
Yes, I haven't seen what the penalties are. So there are penalties for not doing this filing, and as of now, it is free. You can go online and do it yourself at fincen.gov. I don't believe there's any reason to use somebody else to actually make this filing if you just go in and do it there at fincen.gov and should be able to walk through it. Now, if we find out that at some point it becomes a little bit more complicated to do, then yes, we would recommend you use somebody out there to do these filings. And it is not something that gets filed with your tax return. It's something you've actually got to do separate from filing your taxes.
I think that's an important point to kind of underline here because we know the scammers are going to try to take advantage of this in some way at some point, maybe sooner rather than later. But I think that's an important note there that this is something you can do yourself. You don't need to hire somebody to necessarily file this for you. It sounds like a pretty simple process. It's online. Again, there shouldn't be any fees associated with it, right? That's all kind of simple right now.
That is correct. There is right now no fees through FinCEN out there. Now, I'm sure here in the next month or two that you're going to hear, we can do it for you. It only costs you X number of dollars to do it. Go online and try to do it yourself. And being an owner-operator, you're always looking at ways of, keeping your expenses down. Don't incur an expense that you can do in what appears to be a short amount of time to do it. Simple enough questions from what we've seen through fincen.gov that you would be able to do it. And, that's what I would recommend for every owner-operator out there. If you are running a corporation, an S-Corp, an LLC, limited partnership, anything that's been created through the Secretary of State.
Yeah, makes sense. I mean, like I said earlier, it may be simple, and it sounds like it is, but it's just another in this long list of things that owner-operators have to keep track of and make sure they're doing so they don't get penalized. So we've added another thing here, and I guess we can thank the criminals for that, for ruining it for everybody. In terms of going somewhere for more information, it sounds like it's pretty simple. You just go to that fincen.gov, FINCEN.gov website, and it should explain it to you there, right?
Yeah, it has pretty good links out there. It's got beneficial ownership information, reporting instructions. We put up on our Facebook page a link to all that instructions as well. So you can look us up at Taxation Solutions on Facebook or taxationsolutions.net. Then you can get to our Facebook page there. We'll have links to fincen.gov so you can follow this through. And it'll actually be on our webpage, and I'm sure we'll tag OOIDA and everything on there as well. So it'll have a really good link to get to the beneficial ownership information filings.
There you go. Hey, Barry, thanks for your time. I know you are, I think, maybe at the beginning of tax season right now, but I know it's going to get pretty busy for you. Before we let you go here, any words of wisdom for our listeners as they're getting their taxes in order before April 15th?
Well, we tell everybody is, gather all your information, use us for your bookkeeping and taxes, of course, here at taxationsolutions.net. And you can also, reach us here at our number. It's toll free. It's 888-930-1016. But above all, if you don't use us, use somebody. But make sure during 2024, your goal should be to make sure that you make any estimated tax payments so that you're not accumulating more debt with the IRS and don't have a big tax burden at April 15th when you do your filing. So we recommend that to everybody. We preach that. One other thing, and I know we're going to get set to talk about this here sometime soon, anybody thinking about jumping out and becoming an owner-operator even, OIDA Foundation's putting on here that's coming up in October, I believe it is, Truck to Success Seminar. So, find out information on that. Join us at the seminar. I'll be there, and great people here at OIDA that'll be there talking about Truck to Success.
You mentioned staying on top of this. Is that kind of the biggest mistake people make, is maybe waiting too long before they start putting all the numbers together and doing all the taxes? I guess do it now rather than later. Is that kind of the biggest mistake people make?
The biggest mistake is, not keeping track of all your business income, business expenses as you go through the year. You're running a business. You need to know where you're at and where you're heading and be prepared for, your tax burden as you go, or find ways to decrease that tax burden with some tax planning and being ahead of the game and not just being behind the eight ball come tax deadline.
There you go. Barry, great advice. We appreciate it. And I'm sure we'll talk to you, as you mentioned here, later on in the year. And happy tax season to you.
Hey, I appreciate it. Thank you very much. And everybody be safe out there on the road. And thanks for listening.
Our thanks once again to Barry Fowler of Taxation Solutions. You heard him mention their website there, but we'll do it again. It's taxationsolutions.net. And a couple more reminders as we sprint into tax season now, courtesy of Shasta May of MBA Tax and Bookkeeping Service, who recently provided us with a list of things to do sooner rather than later.
You want to make sure you have, all your settlements. If you are using a card provided by a carrier, you want to make sure you have all the activity statements for what's on that card. You want to make sure you have all your bank statements. You want to make sure you have all of your credit card statements, all your receipts for cash purchases. If you're taking a home office deduction, you want to gather all your utility bills. You want to measure your space for your home office. And you also want to have copies of any and all equipment transactions for that tax year. Any equipment bought, sold, traded, leased, everything. You need copies of everything for any transactions. So that is vital. You want to figure out the business interest you paid for the year. So that means on any business loans, any equipment loans, credit card interest for business credit cards. So nothing personal. You cannot take any kind of interest on a credit card with personal expenses, but if it's strictly business, you get to take that interest that you paid throughout the year on that credit card. So that's important to gather all of that. If you're taking a deduction for business miles on your personal vehicle, you want to absolutely, as soon as possible, get an odometer reading. You want to do that at the beginning and end of each year.
Thanks to Shasta May for that helpful advice. You can find more at mbataxhelp.com. We've got to pull over and take a quick break, but don't go anywhere. There's plenty more road ahead of us on today's show.
Penske owns and operates some of the best-maintained vehicles on the planet. Our used trucks come with a 5-year maintenance report and pre-sale inspection. So if you're in the market for a top-quality pre-owned truck, look no further. Search our inventory today at PenskeUsedTrucks.com.
Control your toll costs and eliminate tolling headaches with Prepass Tolls. Prepass Tolls means toll volume discounts. Just one invoice for all tolls and fewer violations. Call 877-878-5970 or go to Prepass.com.
Ready to make more money? Use a better load board. For a limited time, get 50% off Truckstop Loadboard Pro. Just go to truckstop.com/go and enter promo code READY2023 when you purchase Loadboard Pro.
It's tested and proven. Burn 2.1% less fuel when you balance all wheel ends with Centromatic. Call 800-523-8473 to get the OOIDA discount.
A long-running court case linked to the trucking industry has finally been settled, nearly a decade and a half since it started. You're listening to Landline Now, and I'm your host, Mark Reddick. Welcome back to the program. The case involves who is an employee and who is an independent contractor. Not a surprising topic in today's trucking industry, but the location may be a surprise. New Jersey. Here to explain is Tyson Fisher of Landline Magazine. Tyson, thanks for joining us.
Hey, thanks for having me.
Let's go back to the start of this whole process in 2010. Who are the players? Who's suing who over what?
So, what we have here is our drivers for a company called Sleepy's. So Sleepy's is it's a mattress firm or mattress company, and I say mattress firm because in 2015, during litigation, Sleepy's was bought out by mattress firm. But for keep it simple here, we'll refer to it as Sleepy's, and they are a mattress company. And so, in order to deliver these mattresses, they would have to have truck drivers to deliver them, right? To do so, they hired independent contractors to do this. And so in 2010, as you mentioned, the independent contractors, the truckers, kind of realized that maybe they're not independent contractors after all. And then from there, they filed a lawsuit. And then, just some background here, I have done stories on many misclassification lawsuits. And at face value, this is just another one of them. It's some of the most common arguments that are made in misclassification lawsuits across the country. In this case, Sleepy's had a terminal in Robbinsville, New Jersey, and they would run anywhere between 50 to 60 trucks per day, sometimes 90 trucks per day during their peak season. And so these contractors would sign a non-exclusive. They would provide a non-exclusive relationship. And so in this contract, it basically said, "Hey, you're allowed to go work for somebody else if you want to, or when you're not delivering for Sleepy's, you can deliver someone else." Well, this lawsuit pretty much argued, that's what the contract says, but in practice, there was just no way that was possible. And so what happened was the independent contractors, first of all, so they had to buy and lease their own vehicles, which is typical of a contractor. They paid for maintenance and fuel and all that. So consequently, they were denied unemployment and compensation, which is essentially what the lawsuit was looking for. But as I said, the lawsuit said that, quote, the drivers exercise virtually no independent control over their own work life. One paragraph read that in addition to not having any time to work for someone else, they basically worked full-time for Sleepy's. They were required to wear Sleepy's uniforms. They had to adhere to Sleepy's grooming standards. And they were required to display Sleepy's logo on their trucks. And so this kind of, it shows that they exerted some control over their operations, which we'll see later is a big no-no when it comes to, whether or not you're an employee or independent contractor. So those were the general facts of the case, that they exerted control over these truck drivers who would have absolutely no time to work for anyone else. And so they took it to the court. And then this is where it gets, pretty complicated, very complicated, because this was in 2010, it's 2024, and it just got settled, and we'll get there, but we'll go back to March of 2012, so it's just about 2 years into this, right? The federal district court basically granted Sleepy's motion for summary judgment. Essentially, the district court said, "Hey, you're right; these are independent contractors." And the way that they came to that decision is known as the right to control test. And what this does is it determines employment status by looking at a litany of factors. I think there's anywhere between 12 or 20 different factors that include, the skill required, the source of the instruments and tools, the location of the work, the method of payment, tax treatment, so on and so forth. There's a whole list. And you don't have to, meet every single criteria. The court will just kind of look at it and kind of say, all right, we'll weigh some of this and see whether or not it is. And to this day, a lot of states still use that. So anyway, in 2012, the district court said, okay, you're independent contractors. Well, obviously, the drivers appealed this decision. It's like there's no way. And then this is where it gets pretty much where we reached into a landmark territory. And so the Third Circuit Court of Appeals, they heard oral arguments in April 2013. And while they were trying to decide on the case, they realized, hey, neither the New Jersey Supreme Court nor any New Jersey appellate court has determined which employment test applies under claims under the state's wage laws. And this is where it gets a little dicey. I'm trying to make it simplify it for you. So this was basically a wage lawsuit. So they were trying to say that under state wage laws that they should be determined to be employees. But as I just stated, there has been no such case that would determine that. There have been cases where the Supreme Court and appellate courts have ruled on like decisions on unemployment benefits and stuff like that,
right?
But not wage law specifically. So that's what we're dealing with here. So. Yeah, the federal appeal court said they actually went to the New Jersey Supreme Court. It's like, hey, can you tell us what to do? That's basically what they asked. And the New Jersey Supreme Court, they obliged. And in January 2015, the New Jersey Supreme Court, in a unanimous decision, determined that the State Department of Labor's ABC test applies. And then this was basically the day that the state of New Jersey basically said, when it comes to wage disputes in the state of New Jersey, we are going to apply the ABC test. And for all intents and purposes, just across the board, that set the ABC test just general, rule for employers. So,
now, the ABC test is something a lot of people are going to be familiar with. We've talked
Absolutely.
about the California version of the ABC test.
Mm-hmm.
This one's different, though, isn't it? It's not quite the same ABC.
It's not. And that's probably why we haven't heard so much about this relative to the California one. So just real quick, the ABC test in New Jersey, the first test is A, the individual has been and will continue to be free from control or direction from the employer. So you're allowed to just to do your job, and whoever you're contracted to can't exert control over you. Prompt B is that the service has to be outside the usual course of the business. So, for example, a plumber helping, doing plumbing services for a IT company, that would be obvious. Or, and this is important in New Jersey, Prompt B, that service is performed outside of all of the places of the business. So what that means is that paves the way for like gig economy workers such as Uber or Lyft or DoorDash, because kind of they're doing the same service in the course of the business, but the place of business is like a stationary building or whatever. They are doing deliveries outside of that. So per New Jersey's ABC test, they are not independent contractors, nor are truckers. But the thing is, so the question is, well, why were the Sleepy's truckers independent contract or employees under the New Jersey's ABC test? That goes back to the exerting control over them, not so much the B prong. And then the last one is that prong C is that the job is customarily engaged in independently established trade or occupation. So to go back to your question or what you pointed out, in California, the big issue here is prong B, which is the service outside the usual course of business. So in New Jersey, again, if you're doing business that's outside of the physical place, then you are an independent contractor. In California, they eliminated that. So that basically means you have to do work that is outside the course. So in that case, truckers, for example, contracted to a trucking company does not satisfy that B prong. In New Jersey, that's not the case. So that's kind of a very important distinction, and that's why you're hearing so much about AB5 in California versus AB5 or AB5. I'm sorry, ABC.
Yeah,
it is.
The letters get confusing.
Yeah. To be fair, it's Assembly Bill AB5 in California that did that. But anyway, I don't want to get too confusing.
Yeah,
here.
it's easy though. It's easy.
But so the Supreme Court said, all right, so hey, the New Jersey Supreme Court said, hey, use the ABC test. So they remanded it back to the district court, and long story short, per the ABC test, the sleepy truckers were determined to be employees, not independent contractors. That decision was handed down in 2015. So, like nearly a decade later, why has the court, why is this, still in practice? Well, that just comes down just to the nature of litigation. So, sleepies, they try to appeal the class action status of the case, and that got denied. And then they tried to get summary judgment again, and that was denied. Again, they just went through the appellate court process. Fast forward to just very recently, and everyone just threw their hands up. It's like, all right,
we're done.
We're done here.
We've had enough of this.
Basically, sleepies got denied so many times by the appellate court to where they realized they're pretty much dead in the water. And so that's when they settled the case for $4.5 million. Yeah, so that's where it brings us to today as far as that New Jersey case is concerned.
Now, what has happened in New Jersey overall since the end of that case? I mean, what has happened in terms of employee versus independent contractor status overall in that state?
So, like I said, that was a landmark decision. It established the ABC test in New Jersey. And I remember when that happened, I was trying to do some research on it, and there were so many blogs written by law firms in New Jersey, basically telling their clients who are employers, like, time to reevaluate how you do work here in the state of New Jersey. And that was absolutely the case. Since 2015, there have been some major decisions at the court level regarding who is and who isn't an employee or independent contractor. I think just last year there was a case that involved drywall workers. They were originally classified as independent contractors, and they won a big case saying that they were employees. So there's been a lot of that going on. But what's important to realize is that in New Jersey, the ABC test applies to wage laws and whatnot. The ABC test is being employed in like a handful of other states. I think 15 or 20 other states do have the ABC test in some form or fashion. The difference is they're not. Usually they're not used in wage disputes. It's unemployment disputes. And I know that gets a little murky, but most of these states haven't codified it into law. It's just, the court precedent says you can use this for unemployment purposes, but in terms of wages, we're going to use the common law test of the 12 to 20 factors. But in New Jersey, since that 2015 Supreme Court decision that was basically started by truckers, you got to kind of watch out whether or not you're an independent contractor or an employee. It's one of the more strict tests in the country.
Is there any lesson to be learned from all this for companies?
I mean, for companies, the lesson here is to kind of pay attention to how you classify your drivers. I mean, essentially. And it goes by state. So if you're in New Jersey or California, and believe Massachusetts is another state that employs the ABC test, you really have to be careful whether or not how you're classifying your drivers. In other states, it's not as big of a deal, But again, So in New Jersey and Massachusetts, you have a lot more wiggle room to classify your truckers as independent contractors. California is being debated today, not so much. So kind of just pay attention to your state laws.
Okay. Tyson, thank you very much for all the information.
Thanks for having me.
I've been talking with Tyson Fisher of Landline Magazine about an employee versus independent contractor court case in New Jersey that has now been settled. You can read more about the case on the Landline website, landline.media. I'm Mark Reddick, and this is Landline Now.
Are you tired of the IRS following you around like a dark cloud? Call 888-557-4020 and get your life back.
Dispatch, I picked up that load of steel, so I'm ready to roll.
Sounds good. Remember, we're getting paid by weight, so make sure to use a cat scale.
I wouldn't weigh anywhere else.
Forget misaccuracy when you're truck on a cat scale. since you started. What you've loved about trucking is the freedom. Heading out on your favorite route, a good driving song, and thinking about truck insurance. Well, maybe not that last one. That's why we're here. At OOIDA, we have a full range of truck insurance products, expert advice, and great customer service, helping you get the right coverage for your operation. Go to OOIDA.com, because your job is to drive. Our job is to help with everything else.
Landline Now, welcome back. There are a number of critical questions you need to answer in order to run a successful trucking business. Among the most important of those questions are, where's the freight going to be and how much is it going to pay? Today, Landline Now senior correspondent Ashley Blackford will bring us answers to both of those important questions with a look at this week's freight markets with the folks from DAT. Here's Ashley now with the report.
Thanks, Mark, and hello once again to Robert Rouse with DAT. How are you doing today, Robert?
I'm doing great, Ashley. Thanks for asking.
Let's start off by taking a look at last week. How did the spot market perform?
Yeah, it's been a rough start to the year for sure. Nationally, we saw the number of loads decrease again by about 19%. That's all the way down to around 777,000 loads on the DAT load board. To give you in perspective, that's kind of where we were at the end of last year in a very slow December. That also marks the lowest load volume for this week of the year in the last 8 years. So not great so far. While load volumes dropped across all three equipment types, we saw the biggest decrease actually in dry vans from last week. While we're in a slow season for the start of the year until produce season starts to kick in, we didn't see any major increase in loads, even with the Super Bowl and Valentine's Day happening. So that's usually we would see some little bump from those. When we look at the number of trucks on the DAT load board, they increased last week up to 329,000 trucks, really trying to chase every available opportunity out on the market. When we look at the overall strength of the spot market last week, we saw load to truck ratios decrease, of course, across all three equipment types. Similar to the overall load volume, we're seeing the lowest load to truck ratios in the last 8 years for this time of year. If we just look at one of them, reefer freight, load post volumes continue to cool following last week's 23% week over week decline, and volumes are 53% lower than last year. That's mostly impacted by lower truckloads of produce moving nationally, which were about 17% lower than this time last year, according to the USDA. And carrier equipment posts were up slightly, resulting in last week's reefer loaded truck ratio decreasing by 23% week over week to 2.39. That's, again, the lowest in the last 8 years that we've been tracking that metric. With the lower load volumes and plentiful supply of trucks in the market, we saw rates plunge across all three equipment types last week. First, the national average dry van line haul rate dropped by about 5 cents per mile last week. That's the largest week over week decline in over a year. At $2.11 per mile, line haul rates are about 9 cents per mile lower than this time last year, and just about 3 cents per mile higher than in 2019. Next, if we look at reefers, the decline in the national average spot rate continues to accelerate, following last week's 6 cents per mile decrease. At $2.48 per mile, line haul rates have decreased by about 8 cents per mile in the last month. The last rate trend to watch is the increase in diesel prices. As we move into spring, the greater demand will continue to drive up the diesel prices and impact carrier profitability. This week, the national diesel price actually went back over $4 a gallon for the first time in months. It jumped by 21 cents up to $4.10 per gallon on the national average.
What markets should owner-operators know more about this week?
Yeah, during the spring, farmers begin to get ready for the planting season for summer crops, increasing the demand for machinery and diesel. Machinery imports and sales for farm machinery typically peak in March, with a significant volume of loads moving between the Port of Baltimore and the Midwest. The Port of Baltimore has 6 public marine terminals that handle autos and roll-on, roll-off. They call them RoRos. Containers, forest products, and project cargoes. The port also handles more RoRo farm and construction machinery than any other U.S. port. Baltimore's proximity to the Midwest major farm and construction equipment manufacturers has helped it become the leading U.S. port for combines, tractors, hay balers, and importing excavators and backhoes. According to the Piers import data, Baltimore is ranked first for roll-on, roll-off tonnage with 12.4% of the national total, only followed by Vancouver with about 7%. Baltimore import volumes were up by about 5.6 year over year at the end of 2023, totaling 1.8 million tons. That's the highest tonnage since 2018. Now, automobiles accounted for about 64% of all the roll-on, roll-off volume, but construction equipment, cables, and tractors accounted for about 34% of the total roll-on, roll-off tonnage. The latest data from Piers will be helpful for specialized flatbed carriers and brokers looking to take advantage of the annual peak in machinery imports, which is typically March and April. Since most of the imports into the port is machinery, this market is great for all different types of flatbed and specialized decks. This market is not super strong for vans and reefers at this time of year. Lastly, when we look at our market forecast in Baltimore for this week, it shows very tight capacity for flatbeds and pretty loose capacity for both vans and reefers.
What tips do you have for owner-operators this week?
Yeah, over the weekend I was speaking with a family member about emails that he was getting. He mentioned how he just seemed to get these weird emails, but figured they looked pretty legit because, of the logos and other things in the email. And this really hit home for me, as this could be a very bad thing for him if he didn't know exactly how to handle those situations. Unfortunately, phishing and fraud is a growing concern in every part of our lives, both personal and professional. To help you flag suspicious behavior and stop fraud before it happens, we've compiled some security best practices for your organization to ensure your accounts are never compromised. The first thing is always look out for social engineering attempts. Of all security breaches, 82% involve a human element. Attackers have become experts in manipulation via social engineering, which includes phishing. So follow some of these tips and it will help you protect you and your account. First, report and delete requests for personal information and passwords. If anyone requests information via any communication method, do not provide it with them. That's always going to be a scam. Specifically, DAT will never call, email, or text any individual users requesting their passwords for any reason. There's just no reason for any software company to do that. Also, do not download files that you do not know. Scammers may send urgent communications requesting you to download an attachment. Take time to verify who the sender is and that the communication is legit before acting. Any official communication from DAT will come from an email address that is at dat.com, and any variation of that is likely a scam. This is also important for owner-operators because you guys are getting tons of invoices, things like that. Make sure that it's coming from somebody that you actually know. Also, be on the lookout for suspicious hyperlinks. Social engineers will send hyperlinks in order to present a request for information, such as login credentials, as a method to distribute malware. When presented with suspicious hyperlinks, hover over the link without clicking on it to reveal the location. You usually see it in the lower section of the screen. It will tell you exactly where that link will go. Also, if you receive an email asking you to log into your account, always go directly to the website, either dat.com or whatever software company you're using, and log in directly there. Don't always go through the specific links. Lastly, if it looks suspicious, it probably is. If you've received these phishing communications, do not click any of the links. Report the fraudulent communication through your organization's security team or email service provider. If you encounter suspicious communication, report it to your security team. If you believe you received any phishing email impersonating DAT, please let us know by sending a screenshot and send us the details in a new email. Do not forward the actual phishing email you received from a bad actor. You can also reach out to us at 800-547-5417.
All right. If our listeners want more information, where can they go for that?
Yeah, you can get the latest rate information at dat.com/trendlines or look for the weekly market updates on the DAT blog. They're published every Wednesday.
All right, Robert, thank you so much.
Thanks, Ashley.
That was Robert Rouse with DAT. Mark, back to you.
Thanks, Ashley. That's our program for today. Thank you very much for joining us. I'm Mark Reddick, and this is Landline Now.
Thanks for listening. Be sure to like and subscribe. If you want more content, go to landline.media to get updated news, information, and archived editions of our show. Once again, that's landline.media.
I'm a dad,
a son,
a husband,
wife,
I'm a writer,
photographer.
I farm.
I'm a veteran.
I love old cars, fishing,
my kids,
chrome,
and I am
a professional truck driver.
And together we are OOIDA.
OOIDA was founded by truckers to stand up and speak on behalf of truckers. We've done that by combining the individual voices of our members into a single, powerful voice. Protecting your interests, defending your rights.
Join us! Make your voice heard. Join OOIDA, the Owner-Operator Independent Drivers Association. Call 1-800-444-5791 or visit OOIDA.com.